Gentlemen, welcome back to MGTOW Money. Today's topic, how your personality makes and loses you money. Before we get to that, happy Easter to all of you, as well as I want to sincerely thank the ongoing support from the Patreon investors in this channel, as well as those men that bought me a cup of coffee via PayPal based upon the last video. Let me especially call out and thank Venjay. Venjay, thank you. I do sincerely appreciate your support with this channel. Men, if this channel is important to you, if you want to see this channel continue, if you want to show respect for this channel, please see the video description today. All right, let's get on to today's topic, how your personality makes and can lose you money. Men, basically, of course, there are 7 billion people roughly worldwide, and it is also, though, widely accepted that all of us, every single one of us, has some sort of personality. And of course, these personalities overlap, and there's various controversies about them, how well defined they are, etc. I get all that. And furthermore, it becomes very, very difficult when we're actually trying to judge as personality X from personality Y from personality Z, because of course our personalities might change relative to our age, time of day, circumstances, etc., etc., etc. Again, I get all that. And furthermore, a lot of this personality stuff, whether it be Myers-Briggs, etc., gets compared to astrology, tarot card reading, etc. However, with all that said, we're going to put all that aside, and for our purposes today, for our amateur purposes, and by the way, I'm going to include a link to a book in the video description on how your personality affects your investment style in terms of the things that you invest in, and how, most importantly, you can invest better and hopefully maximize your investments. Now, for my purposes, for our purposes that we're discussing today, I'm going to use a 4-quadrant model of personality types. You will see slides for this 4-quadrant model included in today's video. I'm going to, again, include multiple slides of this 4-quadrant model. No, I didn't incorporate or develop this 4-quadrant model, but I am applying this to various types of investments. Let's get on with it. Generally, again, there are going to be 4 types of personality types based on this 4-quadrant model: driver, expressive, analytic, and amiable. One of these is going to be your dominant, I emphasize your dominant personality type, and you probably have also one that is a secondary personality type. So again, you've got a dominant, you've got a secondary, and I think you could quickly just glance at these 4 and read the brief descriptions in one of the slides, and you can quickly, just gut instinct, you can pick one. That's me. You will very quickly know. You shouldn't need to spend more than literally a split second determining which particular personality type applies to you. And so let's quickly run through these various personality types, and let's specifically reference the type of investments that I believe that these particular personality types are going to be putting their money in, and how, most importantly, they can maximize their investments, because with all these personality types, they can make errors, in my opinion. All right, I'm going to start with the most riskiest type of personality type, in terms of this is the person who's going to be that much more oriented towards risk-taking, high-risk investments. This person is going to be the go big or go home. This person is going to be hitting a few home runs, but is going to be striking out a lot on their investments. Specifically, I'm talking about the expressives. These guys are terrific people to be around. They're a lot of fun to be around. You know who I'm talking about. It might be one of you. You're fun to be around. You're a party thrower. You're not a party goer. You have a great, strong personality. A lot of salespeople, for example. You are typically going to have no concerns with being highly leveraged. In other words, taking out large loans relative to your investments, getting heavily into cryptos, or getting heavily into penny stocks, certainly being attracted to lots and lots of get-rich type MLM schemes, etc. You might even have strong gambling tendencies and that type of thing. Again, this is not a pejorative type of thing. I've been around those people. I too have these types of inclinations, I'll admit. However, again, this is going to be your strong, dominant personality driving type. Now, with that said, of course, if you do feel this way, I would highly encourage you, as you can imagine, your number one thing is going to be put the brakes on. You need to start thinking about, before you make another investment, is think about the downside. What if this goes down to 0 or gets knocked down 90%? There is always that possibility. I emphasize almost no matter what you're investing in, always that possibility. If you're an expressive type of person, you've got to do some serious thinking, and I know that can be difficult, frankly, for an expressive because they tend to be rather impulsive. Again, you just need to put the brakes on a little bit. You need to be sure you're building up a capital base behind you. In other words, building up that cash behind you to support you in case something goes wrong. All right, next, let's talk about drivers. Drivers are someone that I have tremendous admiration for. These guys are all about, let's get it done. Let's go, 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 go. They tend to be very, very confident. They're quick in their decision making. They want to move forward. They can handle uncertainty and ambiguity. They're very confident in their decisions. Many, many videos ago, I did one about old man MGTOW. He was an entrepreneur. He built a business. He still, to this day, despite his age, is very, very active in all types of investments that I perceive to this day are frankly risky. But you know what? He has no problem with it, which is fantastic. He moves forward in spite of that. He's Again, these types of investors are going to be heavily involved in cryptos, more the established cryptos or the Bitcoin or Ethereum, tech stocks. They are not going to be so interested in various income streams, etc. Instead, their idea is going to be, hey, I can handle it. What comes, what may, I can deal with it. Cool. I think that is fantastic. However, again, looking at the downside is absolutely critical. Furthermore, balancing out some of those high-risk investments that you probably have as a driver with more, let's just say, blue chip stocks, more solid stocks, things that pay a consistent dividend, making sure that you have some precious metals aside that'll always hold value, or at least as far as we can possibly tell. This is going to be critical for a driver. Next is the analytic. The analytic probably applies to most of you. I know that it applies to myself. This is a person who's going to be, of course, reasonably risk adverse. They're going to have a spread of different types of assets, almost too spread out in terms of the amount of assets that they have. They're going to be the type of person, it's on a sunny day and they're going to take an umbrella. They're always, unfortunately, fortunately, going to be looking at the downside. It can almost be the too pessimistic for your own good type scenario. It can be the type of person who's attracted to what I call catastrophe porn. The world's going to end tomorrow. I've been hearing this stuff for my entire investment life, going back 30 plus years, that the world's about to end tomorrow. Believe you me, man. The point is, you've got to be willing to sometimes get out of your box a little bit. And my point being specifically is that you've got to be willing to stretch and invest in some new ideas sometimes. For example, I've already admitted many times I passed on Bitcoin years ago when it was below $1,000. I just completely ignored it. It kept coming up numerous times that I would see, and I just ignored it. I didn't think anything about it. If I would have had a scintilla of interest and a scintilla of open-mindedness, I should have at least been looking at it, thinking about it, wondering, hey, what is this? Maybe I need to learn about this. Again, I think it's critical for an analytical thinker to keep their mind open to alternative investments, and also to consider investing in things that are unconventional, to sort of, again, breaking out of that box, getting into some ideas that maybe seem a little bit risky, but they aren't going to destroy them if they go by the wayside. Lastly, the amiable. I've been around these types of people my entire life. They are some of the most tremendously loyal, trusting people that you can possibly imagine. They are also the most skeptical people you can possibly imagine. On a scale of 1 to 10 in terms of the level of risk that they're seeking, 10 being the most risky, they're investing at a 1 to 2 level. They're almost afraid to put any money at all. If they have $1 million, they might emphasize that, put $1,000 into the stock market. They are extremely risk adverse. They're extremely focused on preserving every single penny because that particular penny might disappear on them. them. They have very much of a scarcity mentality. They're so focused on safety and security. They want no leverage whatsoever. They're almost afraid to borrow 50 cents from you because they're afraid you might demand 51 cents from them. You know the type that I'm talking about. These types of people, and again, this might apply to you. These are not pejorative type statements that I'm making, but you've got to seriously consider breaking out of that fortress, breaking out of that prison cell that you've built for yourself. It's okay. You can put a little money in the stock market. I'm not talking about doing anything crazy, but you can put 5% of your money into the stock market, into a S&P index fund or some sort of index fund within your home country, and you're probably going to be okay in the long run. You could put a little money into precious metals. I mean, again, you could buy a round of silver for less than $20 US, and you could say, well, I put a little money into precious metals. The point being, if you start making those small, glacial, microscopic steps, I think that you will feel better and you will feel more confident if you have that sort of amiable personality type. All right, let's quickly summarize. Gentlemen, again, you need ID. You need to identify your personality type, one of those four that I mentioned right up front. Again, gut instinct, which applies to you. 2, you need to think about what are your investments now? What investments do you hold today? In addition, what investments are you thinking about purchasing? And what I might encourage you to do, as opposed to purchasing something new that you already have, in other words, I've already got stocks and I'm going to buy some more stocks. No, why don't you try something else? Why don't you try to buy some gold if you don't own any gold? Or if you don't own any cryptos, why don't you consider putting a little bit into cryptos? Or at least, how about if nothing else, just educating yourself more about cryptos? Or if you don't own any bonds, consider maybe putting a little bit into the bond market. Or if you don't own a particular asset class, if you own no real estate, maybe you consider either buying some real estate or buying a real estate investment trust, a REIT, for example, that owns real estate. I won't get into all the particulars about this. I've done videos about these asset classes. The point being is that, going back to a principle that I've mentioned too many times that I care to remember, diversify, diversify, diversify. Remember, you are spreading your investments across multiple uncorrelated asset classes. And that is the key, regardless whether you're a driver, regardless of whether you're a self-identified expressive, regardless of whether you're a self-identified analytic, regardless of you're identifying yourself as an amiable. You want to spread your assets, your investments across those asset classes, because that is how you're going to ultimately maximize your investment dollars that's going to allow you to achieve the rich life that you deserve. Gentlemen, as always, hit the like button if you found this useful. John Galt, out.